Hey guys, welcome back to another video. The Maestro speaks. I know I've been gone a while. I said that the last video, and I just been busy. Just been busy. Life. Yes, but right now I would like to analyze for you guys the Aussie New Zealand dollar pair. As you know, this pair is trends for a long period of time when it's going up and down. It tends to trend for long periods of time. Yes. Now, if you guys go back in my previous, I think one of my videos I spoke about that. But this is the weekly time frame I'm looking at, and as you guys know, and I say this all the time, I like to analyze the market from the higher time frame perspective because the the week and from the month, the week, the daily, that particular time frames, because I notice that when moves occur on those higher time frames, they tend to be longer and stronger. And also, you're not faked out as much. You're not faked out as much. Okay. Now, that being said, this market right now is at a particular critical area. This market is now, but basically has reacted off of this particular area. All right. Now, if you would put a exact number on it, I would say the 1.0272 level, right? I would say that. But of course, the market does not necessarily have to go to the exact number, but it's a particular area of support that this market has been reacting off of. Historical data says that this particular area in the market is a very strong level, and the sentiment of many traders is that when the market gets to this particular area of support, expect some rejection and some push to the upside. Now, as you can see, we have a rejection off of this area because the market did push down, but then it pushed up. Okay. If you look to the left, see this? You have, I guess, a news event pushed the market down, but then it reacted off of that area and it pushed all the way back up. And look what happened to the market. The market went up, formed a double top, and it came back down, pushed a little past that area, much so. But of course, it pushed back up, going all the way up. And this area here was when the coronavirus was, just, it was like the first wave and there was uncertainty in the market. So this right here is why the market was really going wild, very wild last year between March, February, you know, April. It was acting a little wild, but then things started to level off and went back to behave normal. All right. Now, the market, let me stroll down. Let me stroll down. I get scroll and stroll. I tend to mess up on that. I don't know why, but my wife always reminds me it is not scroll, but it's stroll because I cannot scroll down the street. Ah, all right. So let us go to the daily time frame. Now, the weekly said that the area is strong. Now look what happened here. Yesterday was this count. This would have been Thursday. This particular candle, the bears had it pushed down, but then the bulls came in, pushed the market off of this area, and there was a bullish engulfing. The market is still live right now. It's about to close soon. It is 4:44 p.m. Eastern Standard, Friday. Okay, this is the 17th day of September 2021. This is what the market is at this particular time. There's a slight engulfing of this particular candle because there is a push to the upside. It reacted off of this area. So the sentiment is from traders all over the world, thousands of them, maybe even millions, who knows, that, okay, when the market gets to this area, expect bullish momentum. And look, even though there's a retracement, that's fine. But as you can see, there is bullish momentum. It was a, it was actually way up here, but then the bear's trying to push it back down. Now, I am not saying that this market is going to go up, but just based off of the historical data, based off of the historical data, because I am a technical trader, I look for historical price movement. Okay? Historical price movement. Look, look at this area. And I got a bunch of lines. It's very ugly. I know it's ugly as hell. I better take these lines. You know what? Let me take. I must need to take these lines off. Should I take these lines off? Uh, should I take these lines off? Yeah, I mean, look kind of ugly. I ain't gonna like. So forgive me. All right, but look. Now taking them line. Look here. 2016 reacted. 2019 reacted. Again in 2019, forming a double bottom at this area of support, reacted. Then it pushed a little past it, but it pushed back up 2020. Now in 2021, August, we are right back at the same doggone level. And look what happened. There is a reaction. So I'm saying that based off of historical price movement, this market can potentially go up because in all actuality, if you even let me minimize it even further. Even if you minimize this further, we're talking about multiple times this area has been contested and has failed to break. But and even if it did break slightly, it pushes back up. So the all-time low of this market is the 1.0021 level, right? But there is always a reaction more so off of the 1.0271 level. All right, there's more reaction off of that. Therefore, I don't think that this market might push further. I highly doubt it. And if it does break, it might be a slight push down, but it can push right back up just based off the historical move. You might have where the bears try to force a push down up and form a double bottom and then goes up, or you could have just a reaction and a push all the way back to the upside. But more than likely, there's going to be some reaction off of this area here. So the market can potentially go all the way here, push back down, form another double bottom, and then form a double bottom and push all the way up. But I'm looking at an upward move from here. You see? Now, that being said, I want you to look at this also. I got to take all these lines off, man. Gee, this is disgusting. This is just, oh my goodness. Please forgive me, all. My messy is my clean, okay? I can see through the mess. All right. I want you to look at this good. Look, this market has been consolidating for a long period of time. And we're talking from the weekly time frame perspective. This market has just been ranging. However, there are moves to be made within this area. So I'm telling you guys, ping pong is Forex. In Forex, consolidation is like playing ping pong. You just wait for the ball to come all the way back down to the particular area of familiarity, where there's familiar rejection, and you just wait patiently. Patience is key. Patience is key in trading Forex. You don't know. You wait. You wait. Now, if this is your particular pair of interest, I regret to inform you, and if you trade high time frame, I regret to inform you, you're going to be waiting for quite some time, but it's worth the wait. It is worth the wait. All right. So consolidation basically means that there is a lot of money to be made, but then there's limitation on price movement. But you can make money within these two areas of the support and the resistance. All right. So thank you very much. And this is my disclaimer. Please trade at your own risk. I am not professing to be a guru of any sort, but I am professing to you that if you trade smartly and conservatively and you practice good risk management, you won't make the mistake that I made plenty times in my trading career and other traders have made, but you would be very wise and profitable long term. Feel free to like this video, comment, and subscribe, and hit the notification bell for future updates. Thank you very, very much. You guys have a wonderful weekend. Love yourself. Peace.